Okay, so today we're going to cover Fibonacci or Fibonacci, excuse the pronunciation, and what it basically means in terms of retracement levels. So in this example, we have the dollar CAD on a daily chart, and using our fib levels, we're going to take it from the extreme high down to the recent low. Now, with Fibonacci, in terms of basic rules, once you have a starting point to the finishing point, which would be the highest level down to the lowest level, that would be 100% extension. Now, the key level we'll be focusing on today is the 61.8, which generally means that if an asset moves from this point down to here and has a full 100% extension, generally when it retraces to the 61.8 level, the first point we're going to focus on being this area over here. In most cases, if the price action fails to go over and above the 61.8, in this instance, we stalled around this area, generally the market will revert back down. However, in this current case, if we get a daily close back above the 61.8, it basically means that the market is due for a correction and is most likely will continue back in a upwards direction. So being on the daily, you can see the daily chart or this daily candle is currently above the 61.8. So if we get a close above the 61.8, this would generally mean the odds of this asset pair trading back lower is no longer there. So the 61.8 is basically a key level where if we bounce off it, generally you can short, you'd look to enter on the following candle to catch this movement back down. However, what's currently forming, if this candle closes above the 61.8, most likely the market will continue higher and generally will revert back to the top line. Therefore, the asset would have retraced by a full 100%.